Are U.S. Social Security benefits taxed? Navigating the taxation of Social Security benefits requires an understanding of how the IRS defines your total financial picture. Whether or not you pay taxes on these benefits depends primarily on your combined income, which is a unique sum of your adjusted gross income, non-taxable interest, and half of your annual Social Security payments. If your total income falls below the established federal thresholds, you generally will not owe any federal tax on your benefits. However, as soon as you cross those specific dollar limits, a portion of your monthly check becomes subject to the same tax rates as your ordinary income. This system was designed to provide a safety net for lower-income retirees while ensuring that higher-income households contribute back to the system. The federal government uses a two-tiered system to determine exactly how much of your benefit is considered taxable. For individuals earning between $25,000 and $34,000, or couples earning between $32,000 and $44,000, up to 50% of their Social Security benefits may be taxed. If your combined income exceeds the upper limit of those ranges, as much as 85% of your benefits can be included in your taxable income. It is a common misconception that the IRS takes 85% of the check itself. In reality, that percentage simply represents the amount of the benefit that is unlocked to be taxed at your standard marginal rate. Because these income thresholds have not been adjusted for inflation since they were first implemented decades ago, more retirees find themselves paying these taxes every single year. In addition to federal obligations, you must also consider the specific tax laws of the state in which you reside. As of 2026, the vast majority of U.S. states have moved away from taxing Social Security benefits entirely to make their jurisdictions more retiree-friendly. Only a small handful of states, including Minnesota, Utah, and Vermont, still maintain some level of taxation on these benefits, though many offer significant exemptions for seniors with modest incomes. West Virginia recently completed its scheduled phase-out of this tax, joining the 41 other states and the District of Columbia that allow retirees to keep their full state-level benefits. It is vital to check your specific state's Revenue Department website, as many of these remaining states are currently debating legislation to follow the national trend of full exemption. Planning for these taxes is essential to avoid an unexpected bill when you file your annual return in April. Retirees have the option to have federal taxes withheld directly from their monthly checks by filing a Form W-4V with the Social Security Administration. Alternatively, those with significant outside income from traditional IRAs, 401ks, or part-time work may choose to make quarterly estimated tax payments to the IRS. Failure to plan for these taxes can lead to underpayment penalties, especially for those who are newly retired and used to having taxes automatically deducted from a traditional paycheck. Managing your withdrawals from taxable retirement accounts can often help keep your combined income just below the thresholds that trigger the 85% taxable bracket. Looking forward through 2026, several factors continue to influence how much of your hard-earned benefit you actually get to keep. The 2.8% cost of living adjustment implemented at the start of the year provided a necessary boost to monthly checks, but it also pushed many households into higher combined income categories. Fortunately, recent federal updates have introduced enhanced standard deductions for those over the age of 65, which can help offset some of the tax liability created by higher benefit amounts. Staying informed about these shifting rules is the best way to ensure your retirement strategy remains efficient and sustainable over the long term. By understanding both the federal formulas and your local state laws, you can better predict your net income and enjoy a more secure financial future. For more informative videos on retirement, taxes, and investments, we welcome you to subscribe to our YouTube channel. Thank you.